Despite its widespread popularity, standard costing is not suitable for all industries and products. The method of cost setting is complex and time-consuming, requiring the expertise of well-versed professionals. It is often common practice to forego certain costs due to the tediousness of calculating standard cost, leading to data discrepancies that may undermine decision-making with regards to cost reduction initiatives. Nevertheless, when handled with caution and care by well-trained professionals, standard costing can serve as a reliable strategy for long-term price control. Standard costing's most significant drawbacks are that it does not apply to all businesses or types of product. Its method of cost determination is difficult, laborious, and time-consuming, and it necessitates the assistance of knowledgeable professionals. There is no doubt that standard costing has its limitations. One fundamental limitation is that it does not always accurately reflect the actual cost of production. This can lead to decision-makers making suboptimal decisions based on inaccurate information. Another limitation of standard costing is that it can be pretty inflexible. This rigidity can make it challenging to adapt to changing circumstances, making it less effective in dynamic environments. Finally, standard costing can be quite complex and time-consuming to implement. This can lead to high costs in terms of both money and resources, which may not be justifiable in all cases. Despite its limitations, standard costing remains a widely used tool in cost accounting. When used correctly, this is because it can provide valuable information that can help improve decision-making and ultimately lead to better business outcomes. The question, how will our inventory be valued, is considered a financial choice. No matter what happens, they will continue transacting similarly and carrying out the same activities. All of that information remains the same, including the fact that they will continue to acquire inventory, issue inventory, apply labor, and measure their production capacity. How you want your ledger to behave is an entirely financial choice that you need to make. In the manufacturing sector, there is a preference for using standard costs. Why is this? Organizations typically that want to pay the standard price do so for good reasons. One of them is the information that they have picked up in school. They originate it from that very location. Another rationale for this practice is that standard cost organizations have a better chance of obtaining bank covenants that allow them to borrow money on their inventory. The manufacturer can make statements such as my inventory is going to be X because conventional costing forecasts the final amount. Organizations are more comfortable asking to borrow money against that inventory. There is no variation in the cost of carrying the inventory at any time. However, when real costs are used, there may be volatility in the prices of either the materials or the labor. Limitations of standard costing. Standard costing is a technique that can be helpful for a company's management team. However, it has some limitations. Therefore, management should keep these in mind when employing the use of standard costing. The following is a list of the significant drawbacks associated with using standard costs. 1. Standard costing is limited because it can be inaccurate. Standard costing is a method of allocating costs to products or services. It involves setting a standard price for each output unit, and then calculating the actual cost based on that standard. While standard costing can be helpful in some situations, it can also be inaccurate. This is because it doesn't consider all factors that can affect the cost of production, such as changes in material prices or labor costs. If standard costing is used when costs are changing rapidly, it can lead to decision-making based on outdated information. This can ultimately cause losses for the business. To avoid this, businesses need to be aware of the limitations of standard costing and use it in situations where it is most likely to be accurate. They should also keep track of cost changes to update their standard prices as needed. Using an actual cost database, you can always run your inventory using the standard cost. Therefore, you can always identify the extreme value should the need arise. You can always revert back to standard by performing a journal entry. This is useful if someone usually runs the standard version and is wary about the actual version. It may be helpful until they grow accustomed to utilizing actual costs and get past the first hurdle associated with doing so. 2. Standard costing is limited because it can be misleading. Standard costing is a popular accounting technique but can be pretty misleading. Standard costs are based on averages and standard deviation, leading to inaccuracies. In addition, standard costing does not consider changes in prices or quantities over time, which can lead to errors. As a result, standard costing can sometimes give false information about a company's financial health. When making important decisions, it is crucial to be aware of the potential limitations of standard costing. Standard costing can be a valuable tool for managing costs, but can also be misleading. Standard costs can give managers a false sense of precision, distorting decision-making by overemphasizing short-term cost savings. In addition, standard costing can incentivize managers to game the system by manipulating the data to meet their targets. As a result, standard costing should be used carefully and with other cost management techniques. Finally, standard costing can incentivize managers to manipulate cost figures to meet targets. For example, if a manager knows that his bonus is based on meeting a particular standard cost target, he may be tempted to cut corners to achieve this. This can lead to poor quality products or other problems. 3. Standard costing is limited because it can be unrepresentative of actual costs. Another limitation of standard cost accounting is that it may not always give accurate information about the true cost of production. This is because companies often use different methods to calculate their standard costs. As a result, some companies may end up with different numbers than others. In addition, the methods used to calculate standard costs can often be complex and time-consuming. As a result, companies may not have the time or resources to update their information regularly and accurately. One of the main criticisms of standard costing is that it can be unrepresentative of actual costs. Standard costs are based on theoretical ideal conditions rather than actual conditions. For example, a standard cost might assume that all inputs are used ideally and there is no waste, but there may be some wastage and inefficiency. Standard costing can lead to so-called false profits or notional losses. However, having faith in the process might be one of the most challenging problems of switching to actual pricing. The client who pays the standard cost could respond with anything like, "You're telling me the true cost will come from the end users when they execute transactions." Other issues could result if they don't correctly process the labor or issue the inventory to the work order. The same goes for if they don't appropriately process the inventory. Most organizations, thus, don't want to take that chance under any circumstances. They rather say, "I'm going to claim that my inventory is X using conventional costs." Organizations that do adopt actual pricing find that it allows for greater freedom and are not constrained in any way. The actual pricing method provides more opportunities, greater leeway, and more information that is easily accessible. We want our clients to enjoy resounding levels of success. In point of fact, 9 out of 10 of Synergy Resources clients are aware of the benefits and use real pricing as their method of choice. 4. Standard costing is limited because it can be inflexible. One of the key criticisms of standard costing is that it can be inflexible for analysis and decision making. This is because standard costing relies on predetermined costs, which can often be outdated when used in decision making. This can lead to suboptimal decisions being made, as the actual costs may have changed significantly since the standards were set. This can make it difficult to identify areas where cost savings can be made or where improvements need to be made. Another issue with standard costing is that it can often lead to over or under absorption of fixed costs. This can then distort profitability figures and make it difficult to accurately assess a company's financial performance. Standard costing can also be complex and time-consuming to implement, adding to its inflexibility. Another criticism of standard costing is that it can be inflexible and slow to respond to changes in the business environment. This is because standard costs are often set in advance and are not easily changed. For example, if there is a change in the price of one of the inputs used in production, the standard cost will not reflect this change immediately. This can lead to decision making based on inaccurate information. Another limitation is that standard costs can be challenging to maintain accuracy over time, as they can be affected by changes in the price of raw materials, labor costs, or other factors. This means that standard costing can sometimes give inaccurate results. Also, standard costing does not consider changes in market conditions or other factors that could impact costs. As a result, decisions made based on standard costing may not be optimal. 5. Standard costing is limited because it is time-consuming to calculate. Standard costing is a method of costing used in accounting that assigns costs to products and services based on an average cost. This average cost is then used to allocate resources and calculate prices. While standard costing can be accurate, it can also be very time-consuming to calculate. This can make it impractical for businesses to use it regularly. In addition, standard costing can sometimes lead to inaccurate results, as it does not consider actual costs incurred. As a result, businesses may want to consider alternative cost methods, such as activity-based costing, which can be more accurate and less time-consuming. Standard cost accounting is a time-consuming process. First, you need to determine the standard cost of each item. Then, using this data, you need to calculate the standard cost for each item. Finally, you need to compare the actual cost to the standard cost to identify any variances. By understanding the standard cost of each item, you can better control your overall costs. Additionally, you can take corrective action to reduce costs by identifying variances. One of the main limitations of standard costing is that it can be time-consuming and complex to calculate. This is because standard costs must be estimated for each production element, which can be time-consuming if many different products or components are involved. Using standard costing as a regular tool in your business can make it difficult. Instead, consider using other methods that may be more efficient, such as activity-based costing. If your business is struggling to keep track of its costs, it may be time to consider alternatives to standard costing. Several different cost tracking methods can be just as effective as standard costing, but without the associated time commitment. By switching to a more efficient cost tracking system, your business can save valuable time and resources. 6. Standard costing is limited because it cannot be used in all industries and organizations. While standard costing has long been a staple of financial planning and analysis, it is not without its critics. Some argue that standard costing is too inflexible to be useful in today's fast-paced business environment. Others contend that standard costing only provides a snapshot of past performance without considering future trends or changes in market conditions. Still, others believe standard costing unfairly penalizes companies for deviations from the norm, even when they are due to factors beyond their control. Whatever the merits of these criticisms, it is clear that standard cost cannot be used in all industries and organizations. In some cases, alternative methods may be more appropriate. For example, activity-based costing has gained favor in recent years as a tool for allocating costs more accurately. As businesses become increasingly complex and global in scope, other cost allocation methods will likely continue to gain popularity. Consequently, financial managers must be aware of the limitations of standard cost and be prepared to use alternative methods when necessary. 7. Standard costing is limited because it takes a ton of resources and people to maintain accurately. Any business owner knows that maintaining accurate records is essential to the success of their enterprise. You must have reliable data to make sound decisions about pricing, production, and other factors. That's where the standard cost comes in. Standard cost is a system of estimating the cost of producing a good or service. It considers all the various factors that go into the production process, such as materials, labor, and overhead. The goal is to develop a standard price that can be used as a benchmark for decision making. However, maintaining an accurate standard cost can be extremely difficult and resource intensive. You need to constantly monitor changes in the market and adjust your costs accordingly. You also need to have a large enough sample size to get reliable data. And, of course, you need to have skilled people who analyze and interpret data. As a result, the standard cost cannot be taken lightly. If you use it to run your business, you must be prepared to invest the time and resources necessary to make it work. If the manufacturer relies on normal costs, it is unlikely that they will be able to complete the study promptly. Because the examination of the P and L is done after the event, the manufacturer will need to wait to see whether anything falls out of the variance bucket before making any decisions. In most instances, there will be an element of speculation involved in their choice regarding whether or not accepting this employment will be their death. If you, the manufacturer, are using actual cost, you may check immediately to see what occurred in real time, even before the task is finished, if you are using actual costs. Actual cost indicates that you can perform the analysis right then and there before you are pressured to make the next sale on the same part. 8. Standard costing is limited because it's updated annually. Standard cost is a popular method of pricing inventory, but it has its limitations. One significant limitation is that standard costs are only updated once a year, which can lead to inaccuracies if there are significant changes in the market. For example, if the price of raw materials suddenly increases, the standard cost will not reflect this change until the next update. Standard cost accounting can also be limited because it does not always consider cost changes over time. For example, if the price of raw materials increases, the standard cost of production will also increase. However, if the company does not regularly update its standard cost, it may continue using the old cost information, leading to inaccurate pricing. Overall, standard cost accounting can be a useful tool for companies to use to understand their costs better. However, it is important to know its limitations to avoid making inaccurate decisions. This can lead to serious problems if the company lacks enough cash to cover the higher costs. In addition, standard cost does not always consider specific circumstances that may affect the company's costs. For example, if a company needs to ship its products by air instead of by sea, the additional shipping costs will not be reflected in the standard cost. As a result, companies should be aware of the limitations of the standard cost before using it to price their inventory. The real challenge in current circumstances emphasizes that business speed is not slow but relatively quick. Imagine that a company has developed a novel component and that one of its customers now wishes to place a large order for it. The manufacturer simply does not have the financial resources to wait until the end of the month for their financial experts to analyze the data and determine whether or not there will be a discrepancy between what they have just done and what they have planned. The sales pace is too rapid for the manufacturer to keep up with. Thus, they do not have the time. The sales department has to know immediately whether or not it will be possible to resell a component at the same price. 9. Standard costing is limited because of the resources of its systems and support staff. Today, businesses rely heavily on information technology to operate efficiently. and reach customers. As a result, managing a cost has become a top priority for many organizations. One popular method for controlling a cost is known as standard cost. Standard cost involves setting a budget for each system or project and then closely monitoring actual results to ensure that they stay within the budget. While standard cost can be an effective way to control cost, it has its limitations. One major limitation is that it can often lead to the underutilization of resources. For example, if a company sets a standard cost for its support staff, it may find that its staff is not being used to their full potential. As a result, the company may spend more on its support than necessary. In addition, the standard cost can also lead to an increase in maintenance costs. This is because companies often have to purchase new licenses or hardware when they upgrade their systems. Overall, while standard cost can help manage a cost, it is important to know its limitations. The real question is whether or not manufacturers can employ standard and real costs at the same time. The ERP program may be configured in several different ways to simulate normal expenses. Since ERP is a transactional database, the financials are always the consequence of users carrying out transactions, regardless of the costing methodologies that are used. Every manufacturer uses analytics to determine their expenses and the price point on which they should set their products. Although, in certain circumstances, costs are decreasing, possibly due to pressure from the manufacturer's customers, manufacturers often have little choice but to adjust their operations in response to market environments where costs are climbing. There is no need to distinguish between the two approaches since doing so would not serve any practical purpose. If they are, in fact, typical costs, then their real costs will be consistent with that fact, and the same conclusions will be drawn. 10. Standard cost is limited by confusion regarding non-cost items. One major limitation of standard cost accounting is that it can be difficult to determine which items should be included in calculating the costs. This is because non-cost items, such as overhead and marketing expenses, can often be confused with actual costs. As a result, companies may include these expenses in their standard cost calculation, leading to inaccuracies. The standard cost of an item includes all the necessary costs to produce that item, including materials, labor, and overhead. However, many operations employees are confused about what non-cost items should be included in the standard cost. This can lead to errors in calculating the standard cost, which can, in turn, lead to higher production costs. When setting a standard cost, there are several factors to consider. First, you need to clearly understand the cost of materials and labor. However, considering the overhead cost, including rent, utilities, and insurance, would be best. Unfortunately, many businesses struggle with overhead costs because they are difficult to quantify. To avoid this confusion, it is essential to clearly communicate to all operations employees what should be included in the standard cost of an item. Additionally, regular training on standard costing procedures can help ensure everyone is on the same page. By taking these steps, you can help ensure that your company's standard cost is accurate and doesn't burden your bottom line. As a result, they may include too much or too little in their standard cost, leading to confusion and errors. To avoid this problem, working with an experienced accountant who can help you understand and track all of the necessary costs is essential. With their help, you can be confident that your standard cost will be accurate and informative. 11. Standard cost is limited because it requires deep expertise. Standard costing is a nuanced and sophisticated practice that requires deep domain knowledge. Only through the services of highly trained specialty experts can organizations properly calculate, audit, and report cost data across their operations. Employing cost specialists incurs a notable financial burden. However, the potential savings that come with standard costing are usually well worth this marginal expenditure. Companies that utilize standard costing techniques often experience static or decreasing costs in addition to improved accuracy and transparency in maintenance costs. Given these considerations, it's understandable why many businesses opt to invest in the expertise necessary to facilitate an effective standard cost system. Conclusion: what are the limitations of standard costing? Overall, standard costing has both advantages and disadvantages. While it can be helpful in planning and decision-making, it is vital to be aware of its limitations. Standard costing is a popular method many businesses use to manage costs and make accurate budget forecasts. However, there are several limitations to this method that need to be taken into account. For example, standard costing is unsuitable for all businesses and can be improved by incorporating different costing methods into the mix. Ultimately, standard costing is a helpful tool that can be improved using appropriate techniques. Standard costing is a costing method that is commonly used in manufacturing businesses. It involves setting a standard cost for each item and comparing actual costs to the standard, While standard costing can be a helpful tool, it has several limitations. First, it can be difficult to set accurate standards. Second, actual costs often differ from standard costs due to variations in quality, materials, and labor. Finally, standard costing does not consider the effect of changes in volume on total costs. As a result, while standard costing can be useful, it is crucial to know its limitations. Recommend it reading What are the limitations of standard costing? What will replace standard costing in the future? Standard costing's time has finally come. https divide it by Benjamin 1.com/blog/standard costing what is it, why it matters, and everything in between. International Standard Cost Model Manual, OECD. https divide it by Benjamin 1.com/the bookshop. What are the limitations of standard costing? Frequently asked questions. What are the limitations of standard costing? Standard costing is a popular accounting method to help manage inventory and make better production decisions. However, it has its limitations. For example, it may not be accurate when it comes to pricing products or predicting future costs. Additionally, standard costing can be difficult to use when budgeting and forecasting processes. As such, it's important to understand the method's limitations before using it in your business. Doing so will help you make the most effective use of standard costing in your organization. When should standard costing be used? Standard costing is a cost measurement system that can be used in a variety of business scenarios. It is most effective when there are multiple products or services involved in a project, as it can help identify where costs are being incurred and aid in budgeting for the project. As with any measurement system, standard costing has its limitations. It should not be used blindly. However, when used correctly, standard costing can provide valuable insights into optimizing cost and performance within a business setting. How can standard costing be improved? Standard costing is a valuable tool for managing resources and cost-effective decision-making. However, there are certain limitations to consider when using standard costing. These include lead time, delivery times, and the total cost of ownership. You can improve accuracy and usefulness by understanding these limitations and adjusting standard costing accordingly. Additionally, thoughtful consideration should be given to other factors impacting TCO, like lead time and delivery times. Doing so can better manage your resources and make cost-effective decisions that will benefit your business. Why is traditional costing flawed? When it comes to accounting and budgeting, there's no one-size-fits-all approach. Instead, it's essential to use a cost-effective and accurate methodology that considers the total cost of an item or project. One of the most popular cost-based methods is traditional costing. While it has its benefits, it's ultimately flawed because it focuses on unit cost instead of the total cost. This can lead to inaccurate budgeting and sabotage business growth. Adopting a more holistic cost-benefit analysis when accounting for expenses is important to overcome these limitations. This will help you identify which costs are necessary and beneficial and make better resource allocation decisions. Ultimately, using a cost-effective and accurate methodology will help you achieve your business goals faster and with less risk. Alternatives to traditional costing methods. When it comes to business, a variety of costing methods can be used. However, before choosing one, it's important to consider the various benefits and limitations of each. These include performance-based pricing, pay for results, and value-based pricing. It's also important to understand the different needs of your business to decide which alternative is best. Once you've made the decision, be sure to implement it smoothly and effectively. Frequently asked questions. How can I use standard costing to manage my business better? Standard costing is one of the most effective methods for managing your business. When using standard costing, you can systematically and transparently track the costs associated with a specific product or service systematically and transparently. This will help you better plan and budget and identify areas where your business may be losing money. Standard costing can also help you identify opportunities to improve efficiency and reduce waste in your business. What are the limitations of standard costing? Standard costing is a cost accounting method that helps calculate and organize costs for products or services. However, there are a few critical limitations to standard costing. These include, it can be challenging to account for intangible assets. Collecting data on entire work processes in one shot is not always feasible, and the results may not be reliable. Furthermore, remember that standard costing does not consider the time value of money. Allocating fixed and variable costs to products or services may result in inaccuracies. Although standard costing can help you with budgeting, it is not infallible. What are some of the benefits of using standard costing? Standard costing is a great way to manage and track your business expenses and help you optimize your costs to maximize profits. When you use standard costing, you can better understand what costs are associated with running your business. Additionally, this method can help you identify areas where efficiency improvements can be made. Furthermore, when you use standard costing, you can get an accurate sense of how much your products and services cost. This will help you decide when purchasing materials or contracting services. The limitations of managerial accounting conclusion. Limitation of standard costing frequently asked questions. What are the primary benefits of utilizing a standard pricing structure? Standard costing reduces cost, enhances quality, and grows operational efficacy. It also makes it possible for managers to evaluate the actual results against the anticipated results. What kinds of limitations does the standard costing system have? Standard costing's most significant drawbacks are that it does not apply to all businesses or types of product. Its method of cost determination is difficult, laborious, and time-consuming, and it necessitates the assistance of knowledgeable professionals. When doing standard costing, what factors need to be taken into consideration? When performing standard costing, it is important to consider a number of important factors, including but not limited to budgeting, standard cost, price determination, market conditions, product mix, rate of capacity utilization, labor efficiency standards, the productivity of equipment, and so on. What are the various approaches to standard costing and how do they differ? Standard costing can be broken down into two distinct categories, absorption and direct activity. In the first method, all costs incurred in production operations are added together to form the conversion cost. In the second method, however, consideration is given only to costs directly linked to a good's production or a service's performance. What does it mean to have an overall standard costing? It establishes standards covering all aspects of the company's operation, including financial and non-financial aspects. It entails assigning product costs using rates determined in advance and based on activity measurements. In this manner, managers can establish production and sales quotas grounded in reality for each product while simultaneously calculating the cost of such products.